If you think that 2026 is going to be just another year financially, prepare to be blindsided. 2026 just began, and with it came some major tax changes, as well as some changes in retirement and other financial rules that will affect how much you pay, how you can save, and how your money works for you. In this video, I'm going to walk you through the changes that have already been published, what's scheduled to potentially change in 2026, and what you can do now to ensure you are prepared and planning ahead for the 2026 tax and financial season. So let's get into it. If you're new here, I'm Julie, a former investment banker turned finance coach. My goal is to help you better understand your money and everything that affects it, and to help you work toward financial freedom and financial independence. But first, let's talk a little bit about why 2026 is a big year in terms of taxes and finances. A lot of US tax rules were written with expiration dates, and many of those expiration dates were set to expire at the end of 2025, which would have reverted a lot of favorable tax rules to less favorable versions beginning in 2026. But in mid-2025, Congress passed the One Big Beautiful Bill, which I'm sure many of you have heard of. This bill made many of the tax rules permanent and added some other important changes. This means that 2026 is not just another year for your finances. 2026 marks a new baseline for many tax rules and other financial rules under current law. At the same time, IRS inflation adjustments will take effect for 2026, as they do every year, and some other retirement plan and retirement tax rule changes have also taken effect. So in general, 2026 matters more in terms of your finances. And it's really important to adjust your tax strategy with these changes in mind. So let's talk a little bit about the tax changes that have already taken effect. The IRS has published the tax brackets and standard deductions for 2026. These numbers are adjusted yearly for inflation, and they've already been publicized. The standard deduction for 2026, if you're single, is $16,100. If you're married filing jointly, it's $32,200. And if you're filing head of household, it's $24,150. The federal income tax marginal brackets have also been adjusted upwards for inflation. Even though the rates didn't change, the thresholds went up, which means you keep more income from creeping into higher brackets. In other words, if your income remains the same, you pay slightly less in taxes this year than you would have paid last year. Another change to be aware of is the increase in the state and local tax deduction cap. This change applies for those of you who itemize your deductions on your taxes. The cap has been raised to $40,000 from the original $10,000 for the 2025 tax season, and for the 2026 tax season, it's been slightly adjusted upward for inflation. Under current law, the SALT deduction will continue to increase for inflation through 2029, and then it's scheduled to revert to the $10,000 original deduction cap in 2030. This is great news for those of you who itemize deductions on your taxes. The SALT deduction does, however, begin a phase-out period if you earn above $500,000 a year, or $250,000 a year if you're filing separately. This change is already in effect, and it could make itemizing, especially in high tax states, more advantageous. If you are in a high tax state and you have been taking the standard deduction, 2026 may be the year to take another look at taking the standard deduction versus itemizing. Another change to be aware of for this year's tax season is 1099-K reporting. There was some uncertainty about the IRS lowering the threshold for 1099-K reporting to $600 instead of the former $20,000 cap. But the One Big Beautiful Bill kept the former $20,000 threshold. What exactly does this mean for you? 1099-Ks are issued for a variety of different reasons, but some of the most popular ones are to sellers on marketplaces and platforms such as eBay. When you make money through these platforms, a 1099-K is typically issued if you make above a certain threshold. Keeping this threshold at the $20,000 mark means that you would have to make above and beyond $20,000 in order to receive a 1099-K and be responsible for reporting that income on your taxes. Another important thing to be aware of as we enter a new year is the increased limits on retirement plan contributions. The IRS has already released the 2026 limit, and of course, they are higher across the board thanks to inflation. 401k, 403b, and 457 contributions have been increased to $24,500 from the $23,500 limit in 2025. Catch-up contributions for people age 50 or older have increased to $8,000. And there's still a super catch-up limit of $11,250. The IRA limit is up to $7,500, and the IRA contribution is up to $1,100 for 2026. These increased limits support more tax advantage savings. If you weren't maxing out your retirement accounts before, this is your opportunity to shelter even more of your income from taxes. If you already were maxing out your retirement accounts last year, make sure you adjust your contributions upward to take advantage of the new limits. Another really important rule to be aware of is if you are making catch-up contributions in 2026. Under the Secure Act 2.0, starting in 2026, if your prior year wages exceeded $145,000, your catch-up contributions to your 401k or 403b account must be made as Roth contributions if your plan allows for Roth contributions. What this means is less immediate tax deductions on your catch-up contributions, but more opportunity for tax-free growth later. So if you're planning to make catch-up contributions this year, make sure you're aware of this rule and understand exactly how it works. If you are a high earner making catch-up contributions, they must be Roth contributions. In addition to these specific tax changes, Social Security and other publicly set inflation adjustments will be taking place for 2026. Several Social Security amounts and other numbers adjust annually for inflation. These include the cost of living adjustment, the taxable wage base rises, earnings limits for beneficiaries who are under full retirement age, and credits to earn benefits have slight adjustments. If you're planning to claim Social Security starting in 2026, or you're still working while collecting benefits, make sure you're aware of these numbers and how they impact you personally. In addition to Social Security, there are some other tax benefits already in place. As a result of the One Big Beautiful Bill, a few other provisions are now in effect. One example is the employer-provided child care credits have been increased for 2026 and beyond. An additional senior deduction was also put in place. And as a result, people 65 and over may claim an additional deduction of $6,000 if single and $12,000 if married. This additional deduction applies only if your income falls below the thresholds, and it's effective through 2028 under the current laws. These changes may benefit you if you are paying for childcare or if you're age 65 and older. So if they apply to you, make sure that you're actually claiming them. Don't leave money on the table because you're unaware of the tax changes that exist. So now you're aware of a lot of the tax changes that are taking effect. Let's talk about what you can do now to prepare and to take advantage of them. Make sure you're taking advantage of updated state and local tax deductions and retirement limits. Plan your Roth conversions while the current limits still apply. Make sure to revisit your retirement contributions and especially any catch-up contributions that you plan on making. Make sure you understand the new laws and any proposed changes on the horizon for 2026 and plan your money and tax strategy accordingly. As usual, 2026 will reward people who plan early and take action accordingly. The wealthiest people don't pay less in taxes because they're lucky. They pay less because they plan, they take proactive action, and they act before it's too late. If you want help building a money strategy that fits your life, your income, and your goals, that is literally what I do as a money coach. Check out my website for more information on how we can work together. If you like this video, as usual, please give it a like, subscribe to my channel, and share it with anyone you think could also benefit from this information. Thank you guys so much for watching, and I will see you in my next video.